How to spot a correction in the crypto market. Market corrections in which the price of an asset drops significantly in a short period of time are common in investments, including the crypto market. Although it is difficult to predict 100%, there are some signals that can be used as alarms to get ready. Let's discuss it in detail in 4 chapters. Chapter 1. Global macroeconomic conditions, the main basis driving the crypto market. The crypto market is like a ship sailing in the global ocean. It cannot escape the economic policy storms of major countries like the US, Europe, or China. The value of crypto assets such as Bitcoin or Ethereum goes up and down not only due to technological trends, but is also influenced by investor sentiment towards monetary policy, crises, and the strength of world currencies. Let's dive deeper. 1. Interest rates, the central bank weapon that shakes the market. Think of the Fed as the orchestra director of the financial market. When they raise interest rates, safe haven instruments like US bonds or time deposits suddenly become more attractive. Investors think, instead of putting money in volatile Bitcoin, let's buy US bonds with a yield of 5% per year. Real example. In 2022, the Fed raised interest rates from 0.25% to 4.5% within 10 months. As a result, Bitcoin free falls from $48,000 to $16,000, a 66% fall. Funds poured out of crypto into interest-bearing assets. Why does this matter? High interest rates equals expensive borrowing costs equals companies and investors reduce exposure to risky assets. Crypto, especially altcoins, are often the first victims. 2. Global recession, disaster, or opportunity? Recession is a scourge that suppresses market liquidity. But behind the panic, there is always an interesting pattern. The case of COVID-19 pandemic, 2020. March 2020, stock and crypto markets crashed. Bitcoin plunged to $3,800 due to panic selling. But the U.S. government printed money through economic stimulus, $2.3 trillion. This flow of cheap funds floods the market, including crypto. The result? Bitcoin soared to $69,000 in November 2021, up 1,700% in 1.5 years. Lesson: quantitative easing, QE, equals central banks print money, liquidity flows into speculative assets. Recession plus stimulus equals crypto can be an escape from inflation. 3. DXY index, dollar strength versus crypto. DXY index is a thermometer of USD strength against major currencies, euro, yen, etc. Its relationship with crypto? Inversion. When DXY rises, investors rush to hold USD as a safe haven. Liquidity in the crypto market shrinks, Bitcoin price tends to fall. Example: August 2023, DXY breaks 107, Bitcoin drops to $25,000. When DXY drops, USD weakens, investors look for more hot assets like crypto or tech stocks. Example: November 2021, DXY at 93, Bitcoin touches all-time high of $69,000. Fun fact: Bitcoin is often called anti-dollar, but in the short term, it is still affected by USD sentiment. 4. The role of China and Europe can't be ignored. China, mining ban, 2021, made Bitcoin hash rate plummet 50%. However, Chinese investors remain active through the black market, OTC. Europe, 2022 energy crisis due to Ukraine-Russia war makes mining costs rise, miner profitability drops, Bitcoin sales increase. 5. Must monitor indicators for crypto traders. 1. Fed and ECB schedule. Find out when the next interest rate meeting is. Website: Federal Reserve Calendar, https://www.federalreserve.gov. 2. U.S. inflation data, CPI. If CPI is above expectations, the Fed may raise interest rates, watch out. 3. Non-farm payrolls, NFP. U.S. employment report released every first month. Falling unemployment equals strong economy, interest rates may rise. 4. DXY index. Monitor daily movements on TradingView or investing.com. Strategic action. Become a savvy trader. Use the economic calendar. Tools like Trading Economics or Forex Factory provide real-time alerts. Don't fight sentiment. If the Fed is hawkish, reduce exposure to crypto. Learn from history. Recession equals accumulate Bitcoin. High interest rate equals hold back. Conclusion: crypto is a mirror of the global economy. Crypto prices are not only about blockchain technology, but also about trust in the traditional financial system. When central banks print money, when recession threatens, or when the USD loses its charm, crypto becomes an attractive alternative. But remember, knowledge is the ultimate weapon. Monitor data, understand patterns, and don't get carried away. Bitcoin is a protest against the fragile financial system. Anonymous. Chapter 2. Sell the news. When good news is a trap in the crypto market. The crypto market is an arena of mass psychology. Here, hope is often stronger than reality, and good news can backfire. This is the principle of buy the rumor, sell the news, a phenomenon where asset prices soar on speculation, then collapse once official news is released. Let's break it down with real-life examples and anticipation strategies. This sell the news mechanism. Why good news can make you lose money. Imagine this. A rumor about a rural dangdut concert spreads in the village. Residents flocked to buy tickets because they were sure a famous artist would come. But once the concert started, only local singers appeared. People's reaction? Disappointed and immediately sold cheap tickets. In crypto, a similar pattern occurs. 1. Speculation phase, by the rumor. News of a blockchain upgrade, Bitcoin ETF, or big partnership triggers FOMO, fear of missing out. Traders and whales start hoarding assets. Prices are pushed up. 2. Realization phase, sell the news. As soon as the official news comes out, traders who are already profitable immediately take profit. Prices fall because demand is priced in, and there are no new surprises. Case studies. From Bitcoin ETF to Ethereum Merge. 1. SEC-approved Bitcoin ETF, 2024. Before the announcement, rumors of a Bitcoin ETF to be approved by the SEC, U.S. regulatory agency, triggered a price increase from $30,000 to $45,000, Q4 2023. Investor speculation. ETF will open the door for institutional funds to enter crypto. After announcement, the ETF was officially approved in January 2024, but the flow of institutional funds turned out to be slow due to administrative procedures. Mass profit-taking occurred. Bitcoin fell 25% to $33,000 in 2 weeks. The lesson: ETFs are not an instant solution. It takes time for funds to enter the market. 2. Ethereum Merge, 2022. Before the upgrade, Ethereum was hype as a post-merge green blockchain, switching to proof of stake. ETH price rises from $1,000 to $2,000, Q2, Q3 2022. After successful upgrade, traders sell because there is no new catalyst. The news has already happened. Where is the reason to hold? ETH plunged to $1,300, down 35% in 1 month. The lesson: technology upgrade does not mean automatic price increase. Focus on long-term utility. 3. Dogecoin and Elon Musk's tweet, 2021. Before the tweet, Elon Musk mentioned Dogecoin many times on Twitter, now X. Doge price skyrocketed 300% in a week. After the tweet, once Musk actually announced Dogecoin can be used to buy Tesla merchandise, the price dropped 50%. The reason? Whale had already sold at the peak, and people realized that Doge adoption was limited. The psychology behind sell the news: manipulation and greed. The role of whale and institutions. Whale deliberately pumps the price via media before the event, then sells heavily when retail investors come in. Example: before the ETF announcement, a whale might buy Bitcoin at $30,000, then sell at $45,000 into the hands of small traders. Retail investor greed. Novice traders often overtrade for fear of missing out, without a planned exit strategy. Anticipatory strategy. Don't be a victim. 1. Monitor crypto event calendar. Use CoinMarketCap events or CoinGecko calendar to track the schedule. Blockchain upgrades, e.g. Bitcoin halving, Ethereum hard fork. Regulatory decisions, e.g. legality of stablecoins in Europe. Product launches, e.g. ETFs, crypto futures. Example tools. CoinGecko calendar. https://www.coiniceo.com/events. 2. Gradual take profit. Don't wait until the news comes out. Example strategy. If the price rises 50% before the event, sell 30% of the position to lock profit. Keep the remaining 70% in anticipation of further gains. Analogies. Don't eat the cake all at once. Cut it in small bites. 3. Volume and sentiment analysis. Transaction volume. If the price goes up but the volume goes down, it's a sign of an artificial pump. Watch out. Social media sentiment. Use tools like Sentiment or Lunar Crush to track if the hype has gotten too hot. 4. Play both ways, short and long. When a big event is approaching, e.g. ETF announcement, prepare 2 scenarios. Long position, if the news is better than expected. Short position, in case of sell the news. Note, this is for experienced traders with strict risk management. Conclusion, good news doesn't mean sure profit. The crypto market is an informationally efficient market. Good news is often already read by whales and trading algorithms before it reaches retail hands. The key to survival is 1. Don't get FOMO. Buy on analysis, not headlines. 2. Always have an exit plan. Set take profit and stop loss targets. 3. Study historical patterns. Events like halving or ETFs have similar cycles. In crypto, it's not the fastest, but the most disciplined who make the biggest profits. So, the next time there's gossip about a partnership megaproject or revolutionary regulation, ask yourself, is this already priced in by the market, or is there still room for surprises? When in doubt, feel free to sell the news. Chapter 3. Market Euphoria. When greed overcomes common sense. Euphoria in the crypto market is like an orgy that ends in a massive hangover. At its peak, everyone feels like a genius. Assets rise relentlessly, and fear disappears. But history proves, euphoria is the last alarm before a brutal correction. Let's take a look at how this phase works, the signs, and how to avoid the pitfalls. What is market euphoria? Euphoria is a phase where the market is driven by pure greed, not fundamental analysis. Asset prices rise because everyone is buying, not because of intrinsic value. In crypto, this phase is often triggered by social media hype, Elon Musk, TikTok influencers, exponential price increases that attract new players, the financial revolution narrative that ignores risk. Metaphorical example. Imagine a music concert where tickets sell out in 1 minute. People don't care who performs, they are afraid of missing out. Once the concert starts, the stage is empty. The result? Panic and cheap tickets. Real examples, from Dogecoin to Bitcoin 2017. 1. Dogecoin, 2021, when memes became a religion. Euphoria trigger. Elon Musk tweeted Dogecoin is the people's currency on Twitter. TikTok was filled with Doge to $1 videos with millions of likes. Price action. Doge shot from $0.002, January 2021, to 70 cents, May 2021, up 35,000% in 5 months. Doge's daily trading volume on Binance crossed $10 billion, higher than Apple at the time. The crash. August 2021, Doge plunged 80% to 15 cents. Causes: investors realized Dogecoin had no roadmap, dev team, or real use cases. 2. Bitcoin 2017, ICO fever and Lamborghini on Instagram. Euphoria trigger. ICO, initial coin offering, boom. Projects without white papers raised $50 million in a day. Bitcoin will replace gold, narrative, and $100,000 target price. Price action. Bitcoin skyrocketed from $1,000, January 2017, to $19,700, December 2017. Millions of new investors came in, including grandmothers who asked, "What crypto app should I download?" Crash. 2018. Bitcoin drops to $3,200, 84% correction. 90% of ICO projects fail miserably. Market signs of euphoria. 1. Social media craze. Hashtags like hashtag to the moon, hashtag BTC 500K, or hashtag crypto revolution are trending. TikTok influencers with zero trading experience also share magic portfolios. Example: January 2024, the hashtag Solana to $500 appears 1 million times/day. 2. Crazy volume and leverage. Binance/Bitfinex daily volume increased 300% in a week. Traders use 50x, 100x leverage on Bybit/OKX to buy meme coins. Real data. During Doge peak, Doge futures volume on OKX reached $7 billion per day. 3. Margin debt soars. Loans for trading, margin debt, on exchanges like Bitfinex rose 500% in 1 month. Example, before the 2022 correction, margin debt on Bybit exceeded $15 billion, a historical record. 4. Fundamentals ignored. Projects with no product, team, or roadmap rise 1,000% just because planned listing on Coinbase. Example, Squid Game token, 2021, rose 10,000%, then rug pull when the developer ran away. The psychology behind Euphoria. Why do people get trapped? FOMO, fear of missing out. My office mate bought a Shiba Inu and is suddenly rich. I have to join him. Illusion of rich speed. Novice traders see footage of 1,000% profit in 1 day on YouTube and believe they can replicate it. Herd mentality. People tend to follow the crowd. If everyone is buying, it must be safe, right? Whale manipulation. Large capital owners deliberately pump prices through the media, then sell when retail comes in. Survival strategy. Don't be a statistic. 1. Use the Euphoriometer indicator. Fear and Greed Index. Website, alternative.me. If the indicator is 90 to 100, extreme greed, watch out for a correction. Social sentiment tools. Lunar Crush. Track coin mention volume and sentiment on social media. Sentiment. Monitor whale activity and trending keywords. 2. Stop loss and take profit discipline. Example strategy for speculative assets. Meme coins. Take profit. Sell 50% at 100% profit, 25% at 200%, the rest trailing stop. Stop loss. Set it at 30% below the purchase price. Motto. Profit not taken is debt not yet due. 3. Avoid high leverage during euphoria. If the leverage in the market is 50x dominant, see CoinGlass data. Stay away from futures. Reason. Mass liquidation can happen in minutes during high volatility. 4. Focus on fundamentals. Critical questions before investing. Does this project have a real product? Who is the team behind it? Does the tokenomics make sense? Supply, utility, burning mechanism? Positive example. Ethereum has a clear roadmap, upgrade, DeFi, NFT, more resistant to euphoria. 5. Don't believe the this time is different narrative. History always repeats itself. 2013. Bitcoin is called a bubble, drops 80%. 2017. ICOs called the future, 90% fail. 2021. Memecoin called internet money, Doge drops 80%. Conclusion. Euphoria is the toughest test for traders. At the height of euphoria, discipline is the ultimate weapon. Remember, 1. What goes up fast can fall even faster. 2. If street vendors start discussing crypto, it's time to be careful. 3. Bulls and bears can make rich, but pigs, greedy, are always slaughtered. Crypto markets don't destroy people because of volatility, but because of the illusion that they can beat the cycle. So, when you see a Shiba Inu going to Mars or a monkey NFT selling for the price of a house, ask yourself, am I investing or just going along with the craze? If the answer is no, it might be time to take profit and wait for the storm to pass. Chapter 4. Technical Indicators. Reading the crypto market through numbers and emotions. Technical analysis in crypto isn't just lines and graphs. It's the art of measuring the heartbeat of the market from euphoria to panic. Behind the price fluctuations, there are mathematical patterns and mass psychology that can be weaponized. Let's explore the key indicators to understand. 1. Relative Strength Index, RSI, an overbought/oversold thermometer. RSI is an indicator that measures whether an asset is overbought or oversold. Scale 0 to 30 equals oversold, 70 to 100 equals overbought. How it works. RSI calculates the ratio of rising versus falling prices within a given period, usually 14 days. Analogy, Think of Bitcoin as a car. If the RSI is at 85, it means the engine has overheated and needs a brake correction. Real example. April 2024, Bitcoin's RSI on the weekly time frame hits 85, the highest level since 2021. The result? BTC drops from $72,000 to $62,000 in 3 days, a 14% correction. Lesson: RSI above 70 equals profit-taking signal. Strategy: use the weekly/monthly time frame for accurate signals, avoid daily noise. Combine with support/resistance levels. Example: if the RSI is 80 and the price is at $70,000 resistance, the chance of correction is high. 2. Fear and Greed Index, measuring market emotions. This index, 0-100, describes whether the market is dominated by fear or greed. Data sources: volume, social media, volatility, BTC dominance. Interpretation: 0 to 25, extreme fear, buying opportunity, market capitulation. 50, neutral. 75 to 100, extreme greed, correction alert. Real example. November 2021, Fear and Greed Index breaks 98, extreme greed. Bitcoin reaches ADH of $69,000, then drops 55% in 2 months. June 2022, index at 6, extreme fear. Bitcoin rebounds 40% from $17,600 in a month. How to use. Check daily updates on alternative.me, https://alternative.me/crypto/fear-and-greed-index. If index greater than 90, reduce exposure to risky assets, altcoins, futures. 3. MVRV ratio, market value versus real value. MVRV, market value to realized value, is a ratio that compares market cap, Bitcoin's current price times total supply, realized cap, the average purchase price of all Bitcoins in circulation. How to read. MVRV greater than 3.5. Market is overvalued, potential for a major correction. MVRV 1. Undervalued, market accumulation opportunity. Example: March 2024, Bitcoin MVRV at 3.7, market overheated. The result? BTC corrected 16% from $73,000 to $61,000. Fact: before the 2018 bear market, MVRV had reached 4.8. MVRV pros: indicates whether the price is already well above the average cost of investors. Suitable for identifying the peak of a bull run cycle. 4. Open interest, OI, in futures, a leverage time bomb. Open interest is the total futures contracts that have not yet closed. High OI indicates a leveraged, borrowed, market. Impact of high OI. Long squeeze. If the price drops sharply, long, buy positions are forced into liquidation, accelerates the decline. Short squeeze. If the price rises rapidly, short, sell, positions are liquidated, triggers a pump. Example: March 2024, Bitcoin futures OI reaches $45 billion, all-time high. When BTC drops 10% to $66,000, $2.5 billion long positions are liquidated within 24 hours. Extreme case: June 2022, for $0.5 billion liquidation when BTC falls to $17,600. Celsius goes bankrupt. OI monitor strategy. Use: CoinGlass, https://www.coinglass.com, to track real-time OI and liquidation. If OI rises plus price stagnates, watch out for explosive volatility. Other indicators worth paying attention to. 1. Trading volume. Price increase without volume equals weak signal, could be a false pump. Example: as Bitcoin rises to $70,000 April 2024, volume drops 40% versus 2021 peak, correction occurs. 2. Moving average, MA. The 200-day MA is often a psychological support/resistance. Example: December 2023, BTC rebounded after touching the 200-day MA at $36,000. 3. Fibonacci retracement. The 0.618, 61.8% level is often a rebound or breakdown area. Example: Bitcoin 2024 correction to $62,000 stopped at Fibonacci level 0.5, $61,500. Combination strategy, technical plus fundamental. Bearish scenario example. 1. Fear and greed index at 95, extreme greed. 2. BTC weekly RSI at 85. 3. OI futures reached $40 billion. Action. Take profit 50%, set stop loss, avoid leverage. Bullish scenario example. 1. Fear and greed index at 15, extreme fear. 2. MVRV at 0.8, undervalued. 3. Volume up 200% on rebound. Action. Gradual accumulation of assets. Conclusion. Technical indicators are compasses, not forecasts. Technical indicators cannot predict the future, but they give clues about probabilities. The keys to success are: 1. Combination of at least 3 indicators for signal confirmation. 2. Stick to the trading plan. Don't get emotional when the RSI is overbought but the price keeps rising. 3. Align with macro conditions, interest rates, regulations. A man who reads the charts but ignores the emotions of the market is like a captain who sees the compass but is blind to the storm. So, next time you see Bitcoin's RSI at 90 or the fear and greed index peaking, remember, history doesn't always repeat itself, but it often rhymes. Use indicators as tools, not gods. Chapter 5 Summary. Becoming a master navigator in the sea of crypto volatility. The crypto market is like the open sea, sometimes calm, sometimes stormy. But by combining macro analysis, technicals, and market psychology, you can become a strong captain, not just a drifting passenger. Here's the complete map to survive and win on this battlefield. 1. Diversify. Don't put all your eggs in one basket. A diversification strategy is not just about crypto asset allocation, but also a timing game. Practical example. 2022 scenario. When the Fed raises interest rates to 4.5%, Bitcoin plummets 66%. Traders who allocate 50% of their portfolio to stablecoins, USDT/USDC, can avoid huge losses while being ready to buy when prices are cheap. The analogy: stablecoins are a life preserver in a storm. When the market is red, you can stay afloat without being forced to sell assets at a loss. How to execute? Use a 60-40 ratio, 60% crypto, 40% stablecoins, when the fear and greed index is above 85. Recommended platforms: Binance Earn or Coinbase to store USDT/USDC with 5 to 10% APY interest. 2. Stop loss, the last shield of margin call. Stop loss is not a sign of defeat, but a proof of trading maturity. Case example. March 2024. A trader bought Ethereum at $4,000 with a 15% stop loss, $3,400. When the Israel-Iran war triggered a geopolitical crisis, ETH fell to $3,100. This trader exited at $3,400, 15% loss, while the one without stop loss lost 22.5%. Advanced tactics. Use a trailing stop loss, a stop loss that chases the price up. Example. If ETH rises from $4,000 to $4,500, the trailing stop loss of 15% will automatically rise to $3,825. Recommended tools. Bybit or OKX to set stop loss with intuitive interface. Kraken Pro for automatic trailing stop loss. 3. Eyes and ears on global news. From trade wars to energy crises. The crypto market is a mirror of geopolitical reality. Here are the global crises that have rocked prices. U.S.-China trade war, 2019. Increased tariffs on U.S. imports trigger recession fears. Bitcoin fell 30% in 2 months, but rebounded 120% a year later as a safe haven. ECB, European Central Bank, Policy 2023. ECB raises interest rates by 0.5%, Euro weakens versus USD, European investors rush to buy Bitcoin as a hedge. European energy crisis, 2022. Gas prices jump 300%, Bitcoin miners in Germany go out of business, hash rate drops, BTC price volatile. How to monitor news. Economic calendar. Use Forex Factory or Trading Economics to track GDP, inflation, and central bank meeting data. Credible sources. Follow Twitter account at WatcherGuru or at CryptoCaleo for real-time updates. 4. Combine 3 analyses. Macro, technical, psychology. Case study example. April 2024. 1. Macro analysis. Fed announces U.S. inflation at 3.5%, higher than expected 3.2%, potential rate hike. 2. Technical analysis. Bitcoin RSI at 85, overbought, plus OI futures $45 billion. 3. Market psychology. Social media filled with hashtag BTC100K hashtag. Action taken. Take profit 50% of Bitcoin portfolio. Switch 30% to USDC on an interest-bearing platform. Set a 15% stop loss for the remaining 20%. Result. Bitcoin fell 14% to $62,000, losses minimized. Funds in USDC earn 8% APY, passive income continues to flow. Last message, discipline is key. Schedule portfolio review. Every weekend, check asset allocation and update news. Don't be all-in. Stories of suddenly rich traders are often followed by a round of bankruptcy. Prepare an emergency plan. Keep 10% of your portfolio in stablecoins for buying momentum during market crashes. In crypto, surviving is an art, not an accident. The ones who survive are not the smartest, but the most adaptive. So when you see blood-red charts, negative news running rampant, or FOMO taking hold, remember, volatility is the friend of the prepared and the enemy of the careless. Happy sailing, skipper. Okay, before we end, don't forget our golden rules. 5 important rules of Mr. So Crypto. First, don't use hot money. Use extra or idle money. Do not use money for daily needs or money that will be used in the near future. Second, don't over-leverage. Risk what you can afford to lose if you trade derivatives, futures. Always use a stop loss because the crypto market is very volatile. Third, 70 Bitcoin 30 altcoin. Always allocate more in Bitcoin because Bitcoin is the parent of crypto. By allocating more in Bitcoin, your portfolio will be safer when the market does not meet expectations. Fourth, always stay cash. Always stay in cash 10 to 20 to buy when the market discounts or drops significantly. Then you can sell when the price has risen, so that you still have cash for the next discount. Fifth, think long-term. Investing is not about 1 or 2 days to get rich. So think long-term and minimize the risks that might make your money disappear. Everything takes time. Remember, Warren Buffett didn't build his fortune overnight. If you find this video useful, help us to continue to make videos like this by clicking subscribe and share with your family and friends. Don't forget to let us know in the comments column if there is anything you have questions about, because your comments mean a lot to build this channel. See you soon, and don't forget, HODL knowledge and mindset first, then HODL assets.